Well, welcome to the next video in the Focus to Profit series. In this video, we're going to specifically talk about a new trader edge development template. And what I mean by that is if you're a new trader, you're probably really unfocused and you probably have not really figured out your edge and you're not trading with conviction. In this video, I will share with you the exact steps that you need to follow. So let's actually jump over to the next slide and go through that. So in this video, we'll talk about the exact steps to follow. So if you're a new trader, or even if you're relatively new and you haven't found, let's say you haven't had a positive equity growth, then what is in this video you need to follow to a T. If you're a new trader, if I was starting any new trader on one-on-one training, on one-on-one coaching, this is exactly what I would suggest they do. This is what I would demand they do. The next thing is how many trades to do. We'll talk about how many trades you should do. That makes it statistically significant. We'll talk about the exact chart setup. Actually, I'll go into charts and I'll share with you the exact chart setup that you should have to start developing your edge on the market. The next thing we'll cover is what time frames to trade. So I'll give you a couple options and you should choose one of these 3 time frames to trade. And then, as with most of my videos, we'll dive into other tips and advice, because typically when I jump into charts, I go in a couple different tangents to provide some value and to really talk about having a better edge on the market. So let's jump in here. The first thing that you're going to do, and if you have not watched the previous videos in this series about talking about a single trade idea, you'll definitely want to watch those. These will help you get focused on what you really need to be spending your time on. But this is really simple. At this point in time, if you have not proven that you have a positive equity growth in the market, and you have not proven that you have a trading edge, and you have not proven that you trade with conviction, meaning that you're still emotionally trading, the number one thing you need to really do at this point in time is focus. And you need to focus on a single trade idea until that single trade idea, and this is every session, you need to focus on that single trade idea until you master that trade idea and it becomes profitable. That's the only thing you need to do. You don't need to do anything else. You don't need to do research on indicators. You don't need to watch any other YouTube videos. You don't need to do anything else. You need to focus on a single trade idea until it becomes profitable. Now, one thing you might say is, how do I create a trade idea? I have quite a few videos going through how to do technical analysis on my YouTube channel. If you really want the shortcut to get there, you join my training. You'll have a foundation to create a vast amount of trade ideas across multiple markets. So that's the first thing you need to do. The first thing you need to do is you need to commit to focusing on a single trade idea. That's all. You have to commit to yourself. You have to be honest with yourself, and you have to say, that's what I'm going to do. I want to be successful. You've already raised your hand and you've said that I want trading to be an opportunity for me to gain wealth, to make an income, to whatever your dream or goal is for trading. You've already said that. The next step is for you to take it seriously and do the steps necessary to ensure that you're going to have success. That first step is ensuring that you're focusing. Now, when we talk about this, this will be a recap a little bit from our previous videos, except I'm going to add one thing here. When we're talking about a trade idea, this encompasses every component of a trade. And there's 4 steps to a trade idea. The first step is your trade discovery process. How are you discovering this? The thing I'm going to add to this that is new is that after every one of these processes that you do in your trade, you're going to journal. The next one is entry process. If you remember from the last video, I talked about these are processes that save you time, that save you effort, that are focused. You go through these processes the same step every single time so that there's no question what you do. The only thing I'm adding here is that you're journaling. So on your entry process, after you've entered a trade, you're going to journal. Your trade management process. Let's say you've entered a trade and you said that I should manage this trade by checking into it twice a day at these following times. And then here is my process to do that and make a binary decision. At the end of that, you're going to journal. And then you have an exit process. Obviously, part of your trade management, it might mean that you take an exit, you take some off, whatever it is, you have an exit process. At the end of this, you're going to journal. You're going to journal so much, in fact, that you're going to think that you're not a trader. You're actually a person that journals all the time. You're someone that's writing a novel. You're someone that's really trying to discover themselves. That is the amount of time you're going to be journaling. And the reason for this is that journaling and keeping an extensive and detailed journal is the single best feedback loop you can provide for your trading. Look, you're alone. It's you against the market. Most new traders do not have a support system. You might be part of a group, you might be part of my Discord group, but you're not at a prop firm. You're not underneath someone that has been successful for 20 or 30 years at a hedge firm that is actually teaching you the ropes and how to trade and how to read the market and giving you an edge. Not only a edge on trading, but a technology edge, a systems edge, a process edge. You don't have that. I'm guessing most people watching this video is not at that point. You're not in a firm with a support system. You don't have a support system around you. So what do you need to do? You need to create that own support system. And the only way to do that, the best objective way to do that, is to start journaling everything you do. Because when you start to journal, it focuses your mind and your energy and everything you're doing around that single trade idea. It's one of the best things you can do. One thing I'll share is that I go through phases. I go through phases where I journal, and then as I trade, because I'm trading multiple markets and I've got my system down, I've got my edge down, I do light journaling. But when my trades start to maybe become a little sloppy, or I start noticing that I'm not trading as well as I should, then I get back to the seriousness of journaling and really understanding, why am I making some of these decisions? Why am I deviating from my plans? What's happening in the market? I can't stress this enough. If you want an answer to success in your trading, it's knowing yourself, developing a system around who you are, and the best way to do that is to be honest in your journal and to journal every step of the way. So now that we got that covered, and let me just restate this. You need to commit to journaling. It's the single best thing you can do for your trading. So let's move on and let's talk about the mechanics of this. Let's talk about how many trades you're going to do, and let's jump into the chart and talk about the chart setup you want to use. So how many trades do you want to focus on? The first thing is you want to focus on 50 total trades for this single trade idea. Anything less than that is not statistically viable. It means nothing. So until you get 50 trades underneath your belt with a single trade idea that has all those components, you don't have any proof that you have any type of edge. Now, you're just not going to blindly trade 50 trades. At 20 trades, you're going to do your first checkup. So you're going to develop a trade idea, and you can do some back testing. You can even trade without capital. But what I'm saying in this trade idea, this is not trading on a demo account. This is trading with real capital. So I should preface that from the beginning. This is trading with real capital. So you want 50 trades with real capital, because even on a demo account, your emotions are not the same. No one trades the same on a demo account as they do with real capital on the line. Now, when you get 20 trades in, you're going to do your first checkup. And this first checkup is really a serious deep dive checkup. What you want to do is say, do I have 20 trades? Do I have 20 losing trades? If you have 20 losing trades, then you need to reassess your trade idea, because obviously you're on the wrong track. But most people are going to have something around anywhere from 50-50 to maybe 30-70, meaning 30% of your trades will be positive, 70% won't. It will be something that it will not be, put it this way, you won't have 18 losing trades. If you have 18 losing trades, then you really need to look at your trade idea, stop trading, and adjust as you move forward. So most people are going to be around that 50 to 60 to 70% mark. It really depends. It's so hard to say, because each person is different. Each person learns different. Some people, they get to the 20 trades, and the last 5 trades of those 20 trades, something clicks. I see this happen all the time. It's you have a series of losing trades, your first 4 or 5 or 6 or 7, and then you get a couple winners, and then you start adjusting because you're journaling like crazy, and you're really growing. So you're going through this big growth phase. And then when you get to about 16 to 17, you just have winners. So you have like 3 or 4 winners in a row, and then something clicks. You start to realize that everything that I've been doing, everything is coming together. But most people give up after that 15 or 14 trade, and they don't get to that next level, because 20 is the first plateau. And then thereafter, after you get 20 trades in your belt, what you're going to do is every 5 trades thereafter, you're going to do a more detailed trade checkup. So between 20 and 25, you're not going to do a lot of checkup other than your journaling. But when you get to 25, you want to make sure that you're not blowing your equity out. You're not making bad trades, and you'll have a feel for this already. So what this is trying to avoid, this process, is not to consistently be focused on your equity growth too closely, but I would almost say every 10 trades you should have a checkup, because one of the worst things that you can do is always be watching your equity growth, because that will factor into your trade decisions. You might be having a trade setup that's really good, that is the perfect setup, the perfect trade idea for you, but because you're focused on your equity growth and you had 3 losing trades in a row, you're not going to pull the trigger on that trade because you're focused on a statistical number of trades that really don't tell the full story of your growth. This is kind of hard to explain, but I'm talking at a high level here, but I wanted to provide some guidance on how you go about this. And also realize, and I'm sure you do, with the amount of journaling you're doing and the amount of thought and focus that you're putting into your trade, you're adjusting. So stuff isn't happening in a vacuum. The purpose of journaling is to think through your decisions, is to write through your emotions, is to write how you've been executing your trade processes. And I should have mentioned this from the get-go. With a journal, I have videos on my channel on how to do journaling. The simple way is use a spreadsheet to track raw numbers, and then use a notebook. I use graph paper. So use graph paper and just journal. That's all you need. If you want to get more fancy, you can use a tool like Trello as a free tool. I would not suggest any new trader start with a journaling software right away. It's just too much to learn. It's detracting from your focus. All you need is a spreadsheet and a notebook. And then when you've developed an edge, when the numbers show that you have positive equity growth, or a lot of times when you get to that 50 trades, you have much more conviction in your trading, but you're still not at the point where you have a true edge on the market, but you have enough edge where you've developed the processes and you're following your processes well. And then it's just a matter of getting more experience in the market. And then you'd want to maybe add a journaling software at that point in time. So that's really how to look at the amount of trades that you should be focusing on. Your first goal is 50 trades. And I'll share this in this video. If you get to 50 trades and you're trading a single trade idea, regardless if you're in my training or not, and you are willing to share your spreadsheet or your trade journal, I'll look over that. And I'll share my upfront feedback on where you're at, where there might be potential issues. If someone has taken the time to watch my videos here on YouTube and actually done the work and done 50 trades, then to me that's showing something. I'm willing to put in a little effort here, look at a chart for a little bit, look at the trades, and really give some honest feedback. It'll take me about 20 minutes to do that and to provide a direction. So if you get to that point, that's something you can definitely take advantage of if you'd like. You just get in touch with me at Discord, send me a direct message, and we can go from there. So let's talk about timeframes. Let's jump into that, and then we're going to jump into the charts. So this is real simple. If you're a new trader, you're focusing on a single trade idea on a single time frame. And there's really 3 options here. The first option is daily. So you're going to trade off the daily time frame. And you don't have to do this, but you can look at lower time frames for entry. So I'll share those, what those are here. But the next time frame is 4 hour, and then the next time frame is 1 hour. You pick one of these. This is your primary charting technical analysis time frame that you look at. So if it's the 1 hour, then you pull up the 1 hour chart and you make your decisions on the 1 hour chart. Your trade processes are built around the 1 hour chart. If it's the 4 hour, the same thing. Same with daily. Now, the one thing I'll add to this is that if you're trading off the daily, you can look at the 4 hour or the 1 hour. This can be part of your trade process for entry. So let's say you're looking at the daily and you see an entry to go long. You can look at one or the other, either 4 hour or 1 hour. You don't look at both. You choose one. Choose either the 4 hour or the 1 hour. I would suggest most people probably look at the 4 hour, and then you can use the 4 hour to further define your entry areas, to look at support and resistance if you're using that, to look at value channels, to look at things that are kind of a tighter time scale to maybe get a better entry, or to just get a better feel at a lower time frame. The 4 hour, use the 1 hour, and the 1 hour, use the 15-minute. Nothing else. That's all. If you want what I would suggest for new traders, it's this. And this is dependent on your time that you have available. It's dependent on the type of trading you want to do. Obviously, if you want to do more of a, let's say, 2 to 15-day swing time frame, then the daily is perfect. If you want to do something that's maybe 1 to 2 days, then the 1 hour and 4 hour can be good. Sometimes you can turn those into longer swings as well. But this will be dictated on the amount of time you have, the type of trader you are, and really the type of system that you want to develop. But I wouldn't deviate from this. The only other thing I would deviate from is that you could trade off the weekly and then use the daily for entry. So that's another thing that you can do. Most people, they're not in the mindset to do that with trading, but that can be a very successful way to trade. So the one thing I would add to this is that you can trade off the weekly, use the daily for entry. That works really well in a lot of markets. So let's jump over to our chart. I'm going to share with you the exact setup that you want to have to start developing your trade processes and your trade system. Okay, so here we are in a chart. We're looking at the crypto market. We're looking at BNB, BTC, and we're looking at that on the daily time frame. And what I'll share here is the exact setup, the exact chart setup that new traders should be using. And the first thing that I would mention before we dive in is that if you have not watched my video on my channel about price, then you need to watch that video. Price is the only thing that you need to be concerned about, and price action. As a new trader, what you want to do is you want to be able to develop an edge off raw price action alone. No indicators. So I have an indicator on here and I'll talk about that. But if you really want to be a trader that has an edge, then you want to get to the closest, most important thing, and you want to develop an edge off that thing, which is price. Price is the single most important thing on your chart, and your ability to read price and what is happening around certain price levels in certain value ranges is the single most important thing that trumps any other indicator, that trumps anything else. Every indicator is lagging. Every indicator should be interpreted through price. So if you want to start with indicators, you're actually hindering yourself at developing a really good edge on the market. And a lot of people are going to resist this, but what I would ask is, how freeing would it be? Just imagine how freeing it would be that you are able to trade off a single raw chart with a couple moving averages. That's the only indicator I would suggest, is moving averages. And the reason for that is because they are an interpretation of the average of price. And if you read them correctly, they will help you stay grounded in trades. That's why the only thing I'm going to suggest here is moving averages. But I'll tell you the exact number you should have as well. So you might be looking at the MACD. You might be looking at the RSI. You might be looking, I could go on and on about indicators. You'll see in charts that I share indicators. And the reason for that is that there are shortcuts, but they are shortcuts based on the interpretation of price. Majority of my trade decisions are made based on price action. And then the indicators are shortcuts because I've done the research, I've done the legwork to really understand why those indicators are on my chart, what they're telling me, so that they further inform my decision on how to read what's happening with price. So I can't say that's strong enough. If you want the shortcut to having an edge on the market, the shortcut is get good at reading price. Another way I'd look at it, and I'm trying to think of analogies that I could use on this, but let's say that you want to learn to navigate in the woods. Well, you should probably learn how to do it without technology, because let's say that something blows up, the world blows up, whatever happens, some zombies come. Well, you're going to want something besides GPS, besides the technology, so that you really know how to navigate via the stars. You know how to navigate with a compass. Let's say that but the actual North Pole shifts, which is something, if you read into, could actually happen. Well, you'd still want the ability to navigate many different ways that don't rely on technology, that doesn't rely on a compass, because if the true north has changed drastically, you're going to be navigating differently. It's the same way with trading. So look at trading as you are looking to understand how to navigate if all technology blows up, if you need to learn how to navigate from the point of having no technology at your side. How do you get to where you need to go highly efficiently? That's what you want to do with trading. Now, it's not the best analogy, but it's really the way I would suggest any new trader look at it. And the reason for that is because if you take the time and effort to do this, this is a skill you will have for the rest of your life. This is something, if you take the time, and I'm talking excitedly here because I see this happen time and time again, is that new traders, they get into the rabbit hole of indicators and looking at divergence, looking at all this other stuff. But if they took the time and they really studied and made a foundation of price action to who they are as a trader, that is something that they can use for the rest of their life. That is something that they can look at any market, doesn't matter what it is, look at any chart. And if they have that skill at raw price action to have an edge, it doesn't matter what market in the future. It doesn't matter how it's charted, as long as it's charted in candlesticks or how you choose to read the price action. As long as you have the ability to read volume, to read price action, to understand value ranges, to understand the components that go into reading price action, that's a skill that you will have for the rest of your life. So I can't stress that enough. I went on there way more than I anticipated. So let's jump in. So the first thing I'm going to say is that if you are in my training, I will be releasing the beta of this Super TSI indicator. This is a indicator that tells you the bias of the market. You can see right here at this point in time, it gave various signals. It gave an early signal for a 1 and 2, and then it turned bullish here. If you are in the training, you have access to this indicator. This is the only indicator, if you're a new trader, I would suggest you put on your chart. And the reason for that is because I've developed this indicator. I've traded across multiple markets. And what it should be designed for is to reinforce a bias that you're seeing in price action. So it's not the single indicator that you don't just say that, well, it turned bull, I'm bullish. It's what this indicator, when these 1, 2, 3, and 4 signals fired here, it's telling you that there's underlying strength to the bull side here. And especially after it hit this long range. But there's another video on how to use this indicator, so I'm not going to go into that. So if you are in my training, that's the only other indicator I would allow on your chart. All right, so let's remove that. So you're not on my training. The next thing you want is either just standard moving averages or exponential moving averages. And I won't go into great detail about how to read moving averages and why it's really important to have these on there. But the main reason for this is that when you get good at relying upon moving averages and what they're telling you, for new traders, this will allow new traders to not panic and will help new traders really see the underlying trend and the underlying strength that is happening in the market when you're reading this correctly. It's the best way to explain that. Now, how many moving averages? You should have no more than 4. And what you really want is you want a combination of fast moving averages and slow moving averages. I do have an indicator that I just released, which is my Forex recommended moving averages, EMAs. If you go to add indicators and you search for my name, there's the Forex EMAs. So I just added this to the chart. And these EMAs, exponential moving averages, there's the 200, the 48, the 24, and the 9. These are moving averages. The 24 and the 9 are moving averages I use across most markets. Most people will use the 20. I like the 24 specifically because it filters out a little bit more of the noise. Plus, on like an hour time frame, it will give you a true 24-hour time view of that moving average. So when you look at the moving averages that I added here, the fast ones are the 24 and 9, and then the slow ones are the 248. And these moving averages will, I'll just give you an idea here, just so you understand this. So let's say you're in this trade here, and you have no other indicator on here. Well, what we're seeing right here is that the white moving average is the 24, and the orange moving average here is the 9. At this point in time here, the 9 moving average crossed. And then as you see here, as it's rising, what is BNB BTC doing across this? It's using the 24 as support. Now it's not the 24 moving average, it's using the 24 moving average price as support on the daily time frame. So we're on the daily time frame here. So you'll see here, and then finally it broke down here. So it closed below that. And then we have a cross between the 9 and the 24 here. So, but it quickly recovered because there still is strength, but now it's trying to come back to this high here. The reason why I bring this up is because if you're in a trade, and let's say that you entered here at this point in time here, not only are you reading price action, so you can clearly see that there's a value range right here that was created. And you can see if we even adjust this value range a little bit, let's use the price, let's use this as price excess. So this would be more like price excess because that's an inflection point. So let's say that this is how you're using this value range. You're drawing this value range. This hasn't happened yet. So this huge move has not happened yet, but you're in this trade and you went long. Well, here you have a value range that has been created. And you might use the low. Let's use the low and the high. Obviously, this would be part of your trade process. So I have a value range that I've created here. And this impulse move up has not happened yet. So if we go back in time. And I think for this video, I will actually do this. So let's go back and use the replay. Go back in time. So here's where we're at. So the reason why I like moving averages for new traders is because just reading this price action alone can be messy. Because new traders need to really be able to make, you're in this trade right now and you're up, let's say 86%. Pretty good trade. Now, at this point in time, you're doing your trade management process and you're saying, do I take some off here? Where is my, should I be more patient? And if you look at what's happening in the market and price action alone, there's a lot of noise there. It looks like it's, now we've already, this is why I hesitate saying some of this stuff because I know the history, but it looks like at this point in time it's going to retrace. It does not look like it's going to find support at this range, but it's going to retrace and probably come back down. That's what it looks like it's going to do. But you do that analysis, and that's part of your trade process. I'm going to remove this here. But what you're also looking for when you're looking at moving averages is, well, the 9 is above the 24, and that's a strong bullish sign that the 9 is still above the 24. There's room here on the 24 moving average, which is a 24 exponential moving average on the daily time frame, to come to the middle of this value range. So that's one thing it needs a breakthrough for support. The 25% of this value range. If you watch my latest video on impulse moves, this will make some sense. And then that's aligning right with the 25%. The 24 EMA. So when you look at the actual average of price, remember price is the most important thing. A moving average is the closest thing to a price as far as outside of just what is the actual price right now and what is it trading at, where has it been historically, what is the story of the chart. Look, this video probably is frustrating a little bit because I'm not sharing specific trade ideas, because you should be developing your own trade ideas. Of course, I have trade ideas in my training that you can develop off of, but this is, I'm explaining why this is the only indicator you want on the chart, which is the EMA, because what it allows you to do is that you've seen, not only in the price action do you see an expansion in price here, this move, but you're seeing an expansion in, both of these are still curving up. You have the 48 curving up, you have the 200 curving up, but there's an expansion in the range of the prices here. So your decision point at this point in time is that not to panic, because you've read price action correctly, but you also realize that there's a little bit of room here given on historically how this kind of moves. Using the exponential moving averages is bringing you further to reality. This is a concept I'm trying to talk around in a way, because I haven't quite found the best way to explain it to really give a clear example. But what I've found is that when you get good at reading moving averages, they make sure that you don't panic in trades, because there's no reason to panic at this point in time. You shouldn't be panicking anyways, but there's no reason to get out of this. You should be giving it enough room to find support, because it's still a bullish scenario. So, and this is, I probably made this decision or something like this in this trade because I share this a lot. I trade BNB on every pullback, and I have positions that are up 300%. I have positions that are up 80%, 40%, 20%, and in those ranges. So if we just forward this chart here, we see that it did pull back, but it pulled back to the 24, and then it found support, and it went on another impulse move from there. So, and we're tracking this. If we go back to just the moving averages, we're still above. There's no reason to be concerned. And let's say that I'm going to put the long tool here. Right now you're up 170%. It's not a bad trade. So let's say you're up 170%. This is probably, and I took some profits in this range because it was right around 4,000. But let's just say that that's a point where it says in your trade system, I probably should take some off, maybe buy back in on a pullback. Or you're looking at this, I have a lot of positions that I haven't taken off at all because I think BNB is the one thing in the market that still has upside. Right now, as I look at this, it's at 34.59 US dollar. And we'll see here at the end of the chart where it's at. But you have no cause, by just looking at price action, that you already feel as a straight price action trader that, yeah, that's an overextension in price. If I want to take profit, there's a high likelihood at this point in time that it might have one impulse up past 4,000, but I probably should take some off and maybe buy back in a retracement, maybe at this inflection point test, or at least find out where it wants to range. So if we go here, it completely had more strength. It completely used the 24 EMA as support again. The 9 is clearly above. It's starting to expand a little bit more. And then part of this is just really understanding that this expansion really comes from this big day here. Maybe we are in price overextension at this point in time. And then we get a cross. Now it's lagging. So obviously we were already thinking about taking a profit here at 170%. But if we waited for the cross, this usually isn't a time unless you think it's really going to break down, because ideally you're going to look for a 2-try test of this price value range, especially if you see something like this in the market where the 24 moving price has been used as a area where buyers are stepping up, then you would expect that there'd be another test to that range, especially once it broke down. But now you're in a bearish scenario. So now you're being very skeptical because, once again, you've seen this big impulse move here, but you're reading the moving averages and it's giving you another input on what is the longer historical aspect of a smoothed out price. So if we just continue this, I'm hoping this makes sense. So it did use the 48 range or so for support. But you see, if you would have been a little bit patient, you see here. Now, this is partially unfair here. So I'm going to jump over to another chart. So let's jump over to the US CAD, just because we know how this unfolds. So let's look at this chart here. This is a little bit more messier. Now, volume is different in the Forex market. It's more pip movement. There is volume here, and I have been a little successful at reading some of this volume, but it's not as much as in the equity market and the crypto market. But let's say that here I'm trying to find where I would execute a trade. where I would execute a trade would be right here. We create a value range. My long entry would be right here. That'd be my long entry. So now when you look at when we look at what's happening with the moving averages here, so we're on the daily time frame. We go to the 1 hour. That's why I wasn't seeing what I wanted to see. I want to provide more like an intraday chart. Same type of setup. I'm going to draw the same type of value channel. It's going to be the same. Value channel here. From the high and the low. Because this didn't happen yet, so I probably would have adjusted this up at this point in time. The second that my 50% mark held and I had a bull bias, I'd enter here. So that would be my entry on the 1 hour time frame. Now what are we seeing here? This is where it really comes into play, because as it moves up here, this is why, remember, moving averages are lagging, but they can, like this type of noise. Obviously, if you would have had an exit right here, that would have been the best place to exit, because you wouldn't have had to wait for it to move another 60 pips. But let's say that you were actively managing this and then this type of move happened. So you're at the point where this, you weren't, let's say your trade check-in, your trade management was here. So here's your trade check-in. Well, we entered down here at the 50% mark, right here, and we're up 140 pips. But there's no signal to get out yet, just raw price action. We do see some volatility here, but that volatility, buyers have stepped up in that volatility. And not only that, the 24 held pretty well right here. And we're still in a bullish scenario with our moving averages. I'm covering moving averages so much because it's the only indicator on here, but I don't need to, probably should cover price action, but this video is a very strange one because I'm not talking about how to create trade setups. I'm just sharing the exact setup. This is all you need. I could trade off just this. What you see here, I trade off just this sometimes. There's two other indicators I'm going to mention on here that you will add once you start getting better. And these two other indicators are the weekly. Okay. I will go to my indicators. You can find these on my profile at TradingView. So I have the weekly, open, high, low, and close, and the daily. So if we add another indicator and we go to the daily, open, high, low, and close, those are the only other two indicators that I would suggest on here because they're so relevant in most markets. I didn't want to start there because this oftentimes confuses people, but as you see here in this trade right now, it adds a lot more noise. But what do I see? Well, I see that this is the daily open right here, and then it's above the weekly open. So this is the weekly open right here. So it's above the weekly open. And the weekly open is, in the Forex market, it's 104 pips away. I mean, that's within a 1.5 day range. So the weekly open might be trying to be retested, but right now, at this point in time, with just raw price action, the first point I really need to be concerned about is this value range here. Is this value range going to be tested at the mean? For those that are in the Forex training, you're going to know what that means. And then this value range, the next area that has another value range is the daily open, which is right here. So the daily open. So this is a daily open. So on a pullback, I have two things here that would factor into whether or not I should get out of this trade. Now, I would have already taken profit here just given how I swing trade because I watch the market so closely. My trading system is that I'm watching this and I would just enter on a retracement if these hold up. So if we go forward here, a lot of time there. That's a lot of time. A lot of time to be in a trade in that range. But it's holding above this so far, but it doesn't look good. So here you can see at this point in time, it turned bearish. The 9 went below the 24, and it's staying below the 24. So we're still bearish here. So if we didn't get out up here, we should get out right now, just because it's bearish. Unless we think that there's no reason to believe that there's going to be strength here. So as you see, it broke down bearish. It's now back at the weekly close, a weekly open right here, which is this black line. For some reason, oh, this is still set up for light charts. So I need to set this up for dark charts. So here, and now it's at the weekly open. You would expect some kind of reaction at the weekly open. There was a little bit, but if it just breaks through the weekly open like that, there it did find support at the weekly open. And so that would have been another trade set up here. And you notice here, at this point in time, we got confirmation that it was turning bullish when the 24 bounced over the 9. Or the 9 bounced over the 24. And then you have the 48 getting above the 200. So you can see here, it's this is just raw price action. So I've added 2 more indicators, the weekly and the daily open, and we got another trade set up here right around the weekly open when it was found that the weekly open held. That's another trade opportunity. You actually got another entry opportunity here when it retested that. If that wasn't a sign to stay in, especially if you're looking at the 15-minute. If you're looking at the 15-minute, and I know when I change that and I'm looking at the history, it doesn't go back. But if you're looking at the 15-minute and that holds up twice on a 2 try on the weekly open, that's a potential another trade opportunity. Now it eventually broke down. So it eventually broke down here. And I think it actually, because I longed this previous week and I shorted this. So I pretty much did both. Yeah. So I took this long here and then I did short it in this range because it fit my trade idea. My Forex trade idea that I trade on the 1 hour time frame and then use the 15-minute time frame for entry. This is like cookie cutter my trading in Forex, these 2 moves. So this move here, 120 some odd pips, and then this move here, not quite as well because I got out early. These are cookie cutter trades for me in the Forex market. I got out like right here. So it's just, these are setups that I trade every single day, pretty much off straight raw price action. This is my chart setup that I have, is this. I have one other indicator, the Super TSI on there that I trade off of. When you see me share charts with other indicators, I'm a tinkerer in the market. So I'm always going to be a tinkerer in the market. I'm always looking for further shortcuts and edges. So when you see me share other charts, like when I share in Discord or anything else, it's meaningless usually because I'm just sharing whatever chart I have up. So right now I have a couple open charts now. I have the CAD JPY and then I have the BNB ETH. And one of these, this is my crypto chart, but even on here, I'm no longer using the super guppy so much in the crypto market, but it's still on my chart because it's a custom indicator that I customize to kind of see if it could help, but I don't use that. So if I share this chart setup and I say, well, look, BNB ETH is looking to find support in this range, which it doesn't look like it is, but let's say it is, and I share that chart, that doesn't mean that I'm trading off that because I have, when I'm trading, I'm focused and I have only the charts that I trade off of in one screen. I have 6 screens. So I have one screen that really has my charts set, and then I have all these other tinkering charts that I call tinkering. This is me, even this one here, this is me tinkering in the market. This is still me working on this chart setup that you see here, Forex 1 chart, is me working on a new algorithm within the actual Forex market. And I'm specifically looking at the QQE and the key distances here to see if there's correlation between the QQE and the key distances. I share that just because a lot of times I'm sharing a lot of charts, but I trade off just this and 1 or 2 other indicators that I highly rely upon. That's my trading. And when I share that because I don't want you to get distracted from what I share. And to think that I'm hiding something. I'm not hiding anything. I'm always going to be a tinkerer in the market. And what I mean by that is I'm always going to be someone that's out there trying new indicators, testing new things, trying new ideas. It's just even if I just focus on my 7 or 8 trade ideas that are highly successful, that's just the way I'm wired. It's who I am as a trader. I'm fascinated with the market. So I'm fascinated with trying to figure it out and trying to have even better of an edge. So I just share that for context. So in closing, and to be very clear, if you're a new trader and you have not mathematically proven that you've developed an edge on the market, then you should really be focusing on developing an edge with raw price action. And what you're looking at is developing an edge at being able to read the raw price action of a chart with just raw candles. The other thing that you should be looking at is how do you create a technical analysis method that gives you an edge, because it's possible with just raw candles. And then you have up to 4 moving averages. I like EMAs because they're more responsive to recent price action. And then the weekly and daily open, high, and low. Those are the 2 other indicators on there. Now, if you're in the training, the Super TSI is another indicator that will help you tremendously with bias. It will just reinforce what you're seeing usually in price action. But take that out of the mix. With this chart setup, you should then be focusing and developing an edge around how you're doing technical analysis. What is your process for finding new trades? What is your entry process? What is your trade management process? And what is your take profit or exit process? What is your processes there? Now, some of that might be just set. You might just look at this chart right here. Let's go to BNB, ETH. We're starting to see maybe some support here, but let's open up this larger here. You might just say that this looks like right now there's no trade for how I trade. I've actually exited some of my ETH positions here on this pullback, mainly because I don't know if this 50% mark has broken. So I'm expecting that tomorrow that there will be a pullback. If I go to the daily time frame here, from what I see here, I could be completely wrong, but I took some of my profits here just because it failed to even test the 50% range here. So if we and I know I'm hijacking the end of the video to be very clear, I made this decision on price action alone. I see the channel here. There's a channel here. There's a value channel right here. It stopped right at 50% of that value channel and it retraced. So I think given the time that I'm recording this video and given the opportunity that I have to re-enter tomorrow, that there's a higher likelihood that this is going to retrace down to at least here, this value range right here, which is another 5 or 6 or 7%. So 7%. So I took profit here, and then I'll probably re-enter if this holds up. If that doesn't hold up, my next value range is right here. So I'm just skeptical of this range right now, just given the timing of the week that it is right now, where Bitcoin is, where Ethereum is. So, but that was a decision that I made pretty much on raw price action and what was happening. I didn't maximize my profit. If I would have maximized my profit here, I would have got out here. So I did get out at less than about 4 or 5% less than I could have. And these are positions that I have down here at this value range right here. So the positions that I'm making the decision on right now, the other positions that I have lower, I'm just still in. But these are positions that I have down here in this value range. And they're up about 90% or so. So I'm taking some profits with the intention of where it finds value, where it finds the mean of this range, I'll buy back in for the next impulse up. So at this point in time, I still see strength in BNB on all pairs, USD, BTC, and ETH. So I don't have any cause to exit positions that are further down, but I do like to take profit along the way. Straight up raw price action. So I know I deviated a little bit there, but like I said, in recap, 4 EMAs or moving averages, weekly open high low, daily open high low, and close, and then just straight up price action. 50 trades. At the end of the 50 trades, through journaling, through really being focused, you should have a really good idea whether or not you have an edge in the market or what you're drastically doing wrong. There should be a very clear delineation on you've had enough time in the market, you've done enough trades, you've been journaling, you've been adjusting the whole time. You've made it a good go. Now, if you're still having challenges at that point in time, then you're still missing something. You're probably still emotionally trading. Most people, if they get to that level and they're still having challenges, you're still emotionally trading and you haven't dealt with your emotions appropriately. So that's what I would suggest you focus on. All right, well, that's all in this video. I'm sure I'll have a follow-up video that will go into more detail on some of these things. So you definitely want to subscribe. If you are interested in the training, it's real simple to join. All you have to do is join my Discord group, send me a direct message, and it's been one price since the beginning, and I don't intend to change it. It's 0.07 BTC. So it will give you a shortcut to really developing your own trade ideas and having a really solid market understanding. That's all for this video. I look forward to seeing you in the next one.